Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. It is Thursday. It's been a long week. Kind of an odd week. Either the programmers are getting so good and the high-frequency traders are getting so ahead of everything to put as many misdirectional type of situations out there as possible, or we've just been in this tight range and nobody really knows what's next, with a lot of different cross currents as well as divergences. If you would have closed your eyes on Monday and someone would have told you that crude would be at 33, you'd probably think the S&P would be at 1930 to 1950 if you closed your eyes. If someone would have told you, hey, Facebook is at 109, you would have thought that things would have been acting a little bit better, or whatever. There's just divergences everywhere. FANG is turned into like FG, whatever that parameters are, because now you have Amazon down like 14% after hours. I think that's kind of crazy. Just I think about as a trader, we try and think about what's the hardest trade, what's against the conventional wisdom. And yesterday, because we were talking on the desk, every high beta name was getting crushed. Right? Google was weak. Facebook was weak on the lows, Netflix on the lows, Apple on the lows. Everyone said, what, these things aren't going to go up whatsoever. And then that was after Fed Day, and the S&P closed on the lows. Then all of a sudden, Facebook knocks the friggin' cover off the ball. Huge gap up. So then everyone that was kind of short Amazon and Google said, oh my goodness, what happens if Amazon and Google knock the cover off the ball? So shorts got scared because there was a lot of shorts in Amazon thinking that it was overvalued. So that's why today it didn't tick down once almost. And then a lot of people started saying, hey, fourth quarter, best quarter for Amazon. I'm going to go in and buy the calls, or I'm going to be in the stock. And lo and behold, let me just see where Amazon is now. Amazon is down 13.5%, down $86. So in this type of tape, expect the unexpected has been happening every which way, whether it was in the spiders. I think we kept buying 190s and selling 188s, buying 190s and selling 188s, as it seemed like every time the range was going to break down, it rallied, and every time it looked good, it came off. And that was another spin around until you get some continuity. But back to the earnings one more time. One of my rules is you never take stock into earnings. I don't care what your conviction is. You buy options. Because options, your risk is premium paid. Whether you think something's going to go up or you think something's going to go down, if you buy options, you're only risking what you spend versus blowing up. So if people thought they were going to, make their entire year because Facebook was up huge today, because Amazon should be up, they're now down 80 points and they probably don't know what to do. If you bought calls, maybe you would have lost $8 in premium or $12 in premium, and that would have been horrendous and whatever. You would have been like, oh, that sucked, but you wouldn't get bagged. And same way yesterday, I think everyone was saying that Facebook had to be a short because Netflix had a good report and failed. And Apple, cheaper than cheap, was down on the dead lows. So if you shorted Facebook, you got annihilated. But if you bought the puts or a put spread, you didn't lose that much. So anyway, that's just some rules in earnings season, because earnings season could be brutal. You could be right and be wrong, you could be wrong and be right, and you could get crushed and put out of business if you aren't responsible. So anyway, you go to the chart of the SPX. Let's do that one first. This wedge is definitely getting very, very tiresome. Here is that hammer bottom, and then here is this really tight, wedge type formation that I think is driving both the bulls and the bears kind of nuts. Because every time it's looked good to go to the upside, it's failed. Every time it seems like we were going to go down and just get to lower prices or even the lows, we held in there. But at some point, this is going to have to give. You go a little bit closer up, and you want to write down some levels. You'll see that, this is, if you don't do it as a wedge, this is the Fed day high, and here's your Fed day low. And all in all we've been in is in a 5-day range where you have an up day, down day, up day, down day, up day. So if this pattern can persist, we're going to have a down day. If they finally want to get things going, maybe you get 2 days in a row. We haven't had that in a while. And then you look at all the cross currents, the bios. Thank goodness we have things in place to not get crushed, because we were thinking about maybe why didn't it go? So we were looking for a catch-up play, And the reason why the buyers didn't go when the market bounced was because they were that weak. And then you have Hillary Clinton tweeting about them. And then you look at the IBB. We talked about this little failure here. Okay, just so if you look at patterns, I tweeted this. I said, you know what? This looks like a good setup, right? Break above the lower pivot. Maybe you see the 21-day. If we can get above 291.5, and then it tried to go on that day and failed. So I lost money on that day trying to be long, but I didn't revenge it. And if someone saw the market stronger and took the data and said, you know what, the bios are that weak, and then on this day, boom, now all of a sudden the market's still holding higher. You're still above 1870, and the bios are pretty much a stone throw away from the lows. Definitely gave you reasons to be out and maybe even short, and then today happens. So the bios were very weak today. That was one of the reasons why we couldn't rally. Then you also had the Russell doing absolutely nothing. The Russell's been sitting in this range almost as bad as the spiders, with a little bit more relative weakness, but it's getting tight. So at some point maybe it tries to resolve upwards or downwards. At this point you don't know. All you know is that last time you had an inside wedge like this, it drove everyone a little silly before resolving lower. So that's what's going on again. So I would say the bios and the Russell are in the weaker camp. And then you had oil. Oil, everyone was worried about the teens. Now oil's at 33-ish, and people don't really care that much. Okay, but you look at USO now, it's kind of out of the danger zone. The danger zone is when it breaks a new threshold low, not when it pulls in. So remember how oil became pretty much a non-event. You had this igniting 3-day move. It went sideways for a long time, and then people really didn't care about oil again during this whole process, which is good. Well, I don't want to care about oil. But then once it traded below the threshold low, all of a sudden every talking head out there started yapping about oil again and how it was going, below 30 or 20, whatever it was. And then here again went sideways and made a new low, and then it became a problem. So for right now, it did have a bounce. It took back the 8 and 21 day, and now I guess you could see if this gets towards this spot. The XLE also, gave you a decent bounce. You had your your little not the most powerful red dog reversal. Then you had your 3-day move, and then held higher, and now it's above the what's it called, the 21-day. Still has a lot to prove, but at this point, this last threshold low, which was right here, could be a bit of a target for the XLE. At this point, still just grinding higher and trying to reclaim some moving averages, but we've seen this before. We saw it happen here, and then after a long consolidation, which was tradable, it broke to the downside. So we'll see what happens next. Right now, it's just getting that bounce, and look where it came from. It's come from a heck of a lot higher. I try and show you guys this too, because everyone says, oh, how did this happen? How did this happen? Well, it's been below the 200-day since 90. Lots of ways to get out of the way. And then look what happened when it broke this threshold right here. You could have got out of the way. So lots of different ways to get out of the way. And last time it bounced, oh, what a quinky dink. Came right to the prior support that turned into resistance at the 200-day. Well, this time the 200-day is all the way up here. So if you're just thinking about shorting and shorting and shorting this because it's been in a downtrend, just realize it does have some room, and it can push the envelope a little bit if it wants to. So let's go back to some of the tech names. So Facebook gapped up and consolidated, and in my morning note I talked about letting it breathe. Get a 30 to 60 minute range in before you decide whether or not you want to be long or short. And Facebook had a big move, had a big gap, and now we'll see if it could hold above this for a few sessions or so, and then you can get a technical buy area through the prior high. So at this point, there was definitely some opportunities in there. You had to really just buy it in the hole, and then they gave you one trade above it. If you look at the 5-minute, you had the gap. So first move was to the downside, not a big move. So you could have basically somewhat shorted it versus this little high area, which was 107. What is this? 107.95. So 108 was your pivot to right down. That was the first 15-minute high. Came in, and then on the 5-minute, you had a red dog reversal right here, where it traded below this low, which was 105.05, made a low of 104.81. You could have been a buyer right there, and you could have said, I'm going to be a buyer versus this low, or a buyer here versus this low, because it held the majority of the gap, and that was your nice pivot buy. Okay, and then it cleared this, what's it called, this morning, the first 15-30 minute high, and then gave you another trade all the way up near 110, then got over 110, and then just became sideways again. So some intraday action. They're not the easiest. You had to really have conviction to buy it, and now back at this, we'll see how long it could stay above this gap, and the longer it stays above this gap, the higher the probability it takes out the all-time highs and remains one of the chosen ones. So let me see where Amazon is again right now. Amazon is, it's rallied back a little bit. It's at 556. It's down 12%. So you go to Amazon, and Amazon the chart. Unfortunately, I feel bad for those who got a little scared and covered, but I guess that was a prudent thing to do. But who knows, if you would have taken it into earnings anyway. But it cleared this resistance, stopped right in front of this one, and now it's been testing this 555. So 555 is, where is 555? 555 is, this is 597, wow. So, oh wow, it came all the way down to 555. So that's all the way down here. Wow, it came all the way down almost to last week's lows. So I guess that's a decent spot to see if it could hold right around here, and I think it got down there and held off that, but just trapped a lot of people, so we'll see. Now everyone's going to be wondering what to do with Google, because Google also had a strong day into resistance, thinking that some names, if they report good enough, they could rally. So maybe this is still in the game. Obviously it's a totally different business than Amazon, but it's right into resistance right here. So I would assume that if Amazon stays down there, it's going to probably be a little pressure tomorrow, so we'll figure that out. But this has been acting pretty well. Today after the close, Microsoft, woohoo! What a move. Let me see where Microsoft is real quickly. Microsoft, 2 years ago I had it as back from the dead, when everyone and their grandmother called it dead money, and now it's like the darling of Wall Street. So Microsoft is, hold on, up 286, so it was up 4. So let's look at the chart of Microsoft. So it's up $3. So from here, so basically it's back towards kind of like a Facebook type of thing. Facebook broke down right here somewhat, and this is resistance, I would say a big resistance, which it stopped at. This would have been resistance 1. So it's gotten through that, and now it's kind of back there, or a little bit. It's between this. So we'll see what happens tomorrow. We'll see if there's a big gap up. All I know is last time it had a big gap up after earnings, it was horrendous to trade. It just grinded and grinded and grinded. So we'll see what happens this time, if it can hold up. So that might help the futures. With Amazon down so much, maybe Microsoft up $3 might keep things a little bit intact. So you have opportunities tomorrow to make whatever trade you're looking to trade, versus getting taken away with the overnight move, which it seems like the overnight action has so much more continuity than intraday. Intraday has been a sloppy, grindy mess. You know what? Some guys made some money in Apple today. He had 2 trades. It went below yesterday's earnings low, came back above, gave a small red dog reversal both ways. So I don't think this is it, but guys, were trying to tweet me all day long and say, oh, red dog reversal on Apple, you playing it? So I guess you could say there was a small one. Doesn't mean it's a low, where it traded below, just to show you the strategy. It was just at 102. So down here below 93.34, it put a low in at 92.39. You could have been a buyer when it went back above 93.34, which is the red dog reversal strategy. And it went as high as 94.52, giving you $1.20 with limited risk. So I don't know if it means we're going to continue up or it's going to go up in Microsoft, but here's your first little red dog reversal bottom tail to see if it builds. Maybe you just took the trade. Netflix did the same thing. Netflix has been battered and bruised. It too, this one I played. It's been annihilated. Didn't, failed after earnings right here, and then gave you a small red dog reversal with even less risk. What's a red dog reversal, you ask me? Well, it's after a move down from 110, maybe you're trying to find some kind of pivot to buy, and it went through this 90.59, went as low as 90.11, came back above. So this only gave you 48 cents risk to make $4 if you were looking for a reversal, with this stock. So, that's why this even in this tape, that kind of tactical trade is great, because it's defined, and if you happen to just trail it, $4 for 55-cent risk in Netflix, and now maybe you took a little bit overnight. Usually with a strong reversal, you take a third just in case there's follow through. I think Tesla did a little bit of the same. But again, these are one-day situations in broken trends, so they're hard to trust. This came below the prior low, came back above, didn't close so strong, but it's really broken. If you did it for a day trade, great. You just won the match around the pivot. If not, you have to wait. So bottom line is, we've been in a 5-day range, wearing out both sides of the market. Within that 5-day range, a few things changed. We didn't blast off because oil bounced back above 30, went to 33. We didn't fall apart because the bios made new 2016 lows and the Russell's been out of play. We didn't blast off, because Facebook is $1 away from all-time highs. So things are starting to get treated as their own entity or their own trade, which is good. So it's hard when everything moves together both ways because you can't treat anything differently. So at least when some things stand out and some things show relative strength or weakness, you could gravitate towards them and trade them, because lately trading the indices have not been fun, and I've been focusing more on the indices. So, I'm not going to just get away from it now, but I'm going to try and differentiate a little bit and see what's up. So it's Thursday. It's been a long week. It's been a lot of earnings. Tomorrow's the last day of January. I don't know what they want to do, if they want to have an up day to make things look a little bit better so people don't jump out of windows when they see their statements or the conversations aren't as bad, but I don't even know if they have that kind of power anymore. You're going to see probably articles saying this was deemed the worst January ever. And what does that mean? That typically 84% of the time they say so goes January, so goes the year. So if that's the case, that means we probably go a lot lower if we started that way with a potent monthly down move. So we'll see. But in order to do that, we got to get below 1870 first. So if you're thinking this is a bear flag where here's your pull, here's your flag, and you want to press short, you know what? Below 1870 with the close below, maybe that's your thing. If you think that we're not going into recession, people are blowing this out of proportion, we're going to head back up to 1930, or maybe even closer to 1950, or maybe even where we broke down to start the year. Well, then we have to get above this first. So at least we have a tight range, and this tight range is trying to get as many people as frustrated as possible. So don't let that be you. Go, blow off some steam and go out for happy hour, hug your wife, walk the dog, play some tennis, swim some laps, do an Ironman, run a marathon, all tonight. Anyway, I'll see you tomorrow. Have a great night.